Hello guys, welcome back to the Lumley trading video. In this one we are going to be doing some in-depth stock analysis over on Airbnb. Now firstly, why is it down about 5% on the day? I think this is mainly related to the jobless claims, more than expected. Obviously that's always going to be bad for kind of a travel related thing like Airbnb, because it probably means, well, less people have disposable income in general right now. But obviously if there's more people jobless, and obviously less people are going to be going away on holiday. So in general, there is just going to be less profit for a company like Airbnb to make. So that's a fundamental reason for the move. And what are going to be those key support and resistances off a technical standpoint? Again, we tend to use standard deviation channels as our support and resistance because I've been using this maybe 2-3 years now. Just seems to be a very accurate and actually quick way to find key levels. And again, levels that a lot of probably institutions use because they're identifiable and kind of programmable. So algorithms can definitely trigger off them. That's why you tend to see volume increase coming into these levels as well. So from the support side, again, we're at 109 right now. If we're looking to buy, the first support I have is at $99, but really probably not going to be something I touch. Reason for that is at 102 to 110. This is our statistical mean between the 6 month and the 1 year. Now, statistical mean is fair value. If I'm trading a stock, I don't really want to be buying at fair value because there isn't much of an edge there. Obviously, from an investment standpoint, that could be a different thing. But from a trading perspective, I never want to be touching that stock within that value. The only time I will use those levels is if I'm trading to it. You know, if I was holding the stock short, that would be my target. If I was holding the stock long, again, that would be my absolute final target. But never really looking to hold through that range. So again, we do have a support right below it at around $99. But again, that's only about $3.50 of upside. So it might be a potential day trade, but definitely nothing I'm looking to swing. But again, probably just something I'll avoid in general because you're not going to get a great risk to reward on a trade like that, especially if you're using these sort of levels. So instead, I'd be waiting for a move further down from $87 to around $84.75. These are supports. We're down at that 52-week low. There is definitely a good risk to reward. We can have a relatively tight stop, have around at that $100 target, $14 a share on the low end. Upside definitely looks quite appealing. So that would be what I'll be looking at on the support side. If we break that, I would be looking at 75 cents and kind of a 66 cents as a final support. So those are those key supports. If though we end up breaking to the upside, what are key resistances? So we got 120 to around 123. This is one where I'd be a bit more likely to swing trade it and take myself because again, there is actually room to move. You know, that 98 or $99 to 102, not much room to maneuver, but going from 120 to around 111, $9. Definitely a lot more of a move, definitely something we can manage and definitely something I could be looking to swing trade. So those are those first key resistances. If we break that, I'm looking at 135 to 139 and then final levels taking us out to 147 and 157. So those are the key support and resistance lines. Again, my main focus for now is really not touching the stock at all until it can break out to either the 98, the 99 or the 120. So for me, it'll probably be a while until this stock becomes something I'll be paying attention to again, because again, we've got to break to one of those levels. I'd rather be patient than kind of forcing a trade in this area. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out this analysis video.